Hello and welcome to an introduction to Barwon's Global High Income Fund. My name is Nina Dunn and today I'm joined by Lisa Swanton, Investment Manager for Barwon's Global Investments team. Barwon has been investing in listed private equity and listed private debt for over 15 years. In 2014, Barwon launched the Barwon Global High Income Fund, recognising the opportunity in private debt in the attractive yields on offer. Lisa, for those not familiar with Barwon's Global High Income Fund, can you provide us a quick overview?
Our objective with the Barwon Global High Income Fund is to offer investors access to the private debt asset class with liquidity and provide a high current yield of between 7 and 9% per annum. The fund does this by investing in an actively managed portfolio of publicly traded private debt funds listed on major global exchanges. Historically, Australian investors have had a limited range of income investment options. The High Income Fund provides investors an alternative income source and liquid exposure to the growing private debt market.
That sounds quite niche, Lisa. Can you talk us through an example of a fund investment?
What investors might be surprised to know is that the universe we're investing in is over $100 billion in aggregate market cap. The fund's core investments are publicly traded business development companies, or commonly called the BDCs. The BDCs are non-bank lenders lending directly to medium-sized US companies without the use of an intermediary. The loans are typically structured with a floating rate, senior in the capital structure, and secured by the cash flows or assets of the borrower. Although investors may not be familiar with BDCs, they're likely aware of the institutional managers of the BDCs, names like Blackstone, Oaktree, Golub Capital, Ares. All of these asset managers have publicly traded private debt funds.
Okay, so at a high level view, the High Income Fund invests in publicly listed BDCs, which themselves make loans to medium-sized businesses, generally at a floating interest rate?
Exactly. We build a portfolio using a bottom-up stock selection with our analysis focusing on expected earnings yield, credit quality of the loan portfolios, manager track record, and duration of track record.
Okay, in the current environment where we're seeing interest rates rising, how does this impact the fund?
The fund's investments stand to benefit from rising interest rates. Private debt funds generate income based on the difference between interest income earned on their portfolio investments and the interest expense on borrowings. The majority of their portfolio investments feature a floating rate, meaning as rates rise, income earned rises.
So Lisa, are you able to tell me more about the specific characteristics of this asset class and the Barwon Global High Income Fund?
The defining characteristic of private debt is the high yield relative to more traditional income assets like corporate or government debt. Private debt funds are able to offer more attractive yields due to the illiquidity premium earned from the direct loan origination. Tax efficiencies in their structure pass straight through to investors, along with the use of modest leverage. We see the Global High Income Fund as an attractive investment for investors looking for a diversified source of income, exposure to the US middle market, and with a medium-term investment horizon.
Thanks for joining us today. The Barwon Global High Income Fund is priced monthly and is available for monthly applications and redemptions and is available for wholesale investors. Investors can access an Australian dollar hedged or unhedged unit class. Thanks for joining us today. If you would like more information on how to invest, please reach out to Barwon's distribution team.